Hey guys, what's up? This is Andrew for TRENDLINES.com. So as you can see, I am not in Hong Kong yet. I am, guys, stuck in Istanbul for 2 days already, and I'm leaving tonight. I had some issues with the translation of my COVID test. It was in French and they wanted it to be in English or Chinese. Otherwise, they can't understand it. That's what they said. So anyway, I got rejected for my flight to Hong Kong and I'm gonna fly tonight. Normally, I hope. So actually it's not that bad, you know. Istanbul is a beautiful place, so I could take some time to visit the city and it is marvelous. So in the end, this event is not so bad, but I need to update you guys. We are right now Monday morning here. So I'm making some videos on AMC. I hope I'm gonna have some time to make some on GME, on Bitcoin, on Tesla. You know, there is a lot of stocks I want to update you guys on. So I'm gonna start with AMC and see what happened last week and what are the different scenarios for the coming week. Let's get into it. Alright guys, so as usual, I'm gonna start by reminding you what I was saying in my last video. So in my last video, I had different scenarios. I had here a triangle, potential triangle A, B, C, D, E. So it could have been like this. It was like that, A, B, C, and I was waiting for D, E, and then, you know, my fifth wave. All right, so this one is off the table. I had a more bullish, this was my most bullish scenario, and my alternative scenario was the WXY that is happening here. So I told you guys that we might go to the 37, 38 area. I was basically saying 37, but showing you 38.9, I think. So sorry, I was not very clear. Of course, the level I wanted to talk about was actually even a bit higher. It was the bottom of the W wave. So it was around 39, you know, but it's always an area. Here you have 37.5, here you have 35.5. So it's all this area. So you never know where it's going to rebound exactly. Now we know 38.7, and we completed the WXY correction with a strong, a very, very strong rebound, involving a lot of volume, guys. The highest volumes we saw in the past week, I would say. And we had a rebound of around 25%, then slightly corrected. So from here, what are the different scenarios that we might have? As you can see, I have already drawn my preferred scenario, which is that finally this fourth wave is complete. Once again, guys, I want to show you quickly the situation. This is, I think, what we're having. Look, guys, so this is, you know, the Elliott wave theory book. You just type Elliott wave theory written by Frost and Preston on Google, and you're going to find this link in the first 3 links. Then here you tap 333, you know, I'm just doing it with you so you can do it yourself. And here we go, guys. So Elliott explains that fourth waves or second waves, you know, corrective waves, sometimes are not single ABCs. They are combinations of these corrective patterns involving flats, zigzags, triangles, and even sometimes ending diagonals, which is a motive wave. And in this situation, look, guys, look like this really reminds us of AMC correction. We have a ABC flat, then WXY for a zigzag. So this is like, you know, between our 2 threes, and then the second 3, which is not triangle in our case. No, sorry, it's this one. It's flat, zigzag, and zigzag. All right, look, guys. So this is in Elliott wave book once again. So flat, okay, then zigzag, and typical zigzag, guys. So this is a typical corrective pattern. Now, once again, this was not my preferred scenario, and I was telling you, so basically that below the 48 level, which is here, which was the lower band of my triangle, I would be bearish, you know, in the short term, and that I would see the 37, 38 area revisited, which happened actually here. But what is interesting to notice, guys, and I really want to discuss this with you, it's important because, you know, AMC is very tough, guys, to analyze. Let's be honest, because here, what we had, I remind you guys what I was seeing here, and this is the reason why I told you that after, you know, the sharp loss we had on the 2nd of July, then we had the strong rebound. So what I was seeing, guys, here, sorry, it was before actually. Here I didn't have this divergence, but here I had a divergence, and it's very funny to see, you know, between here and here, you can see that the market is making higher lows from the W wave, the bottom of the W wave, and the 52 level we had here. Then we had this rebound, and the momentum indicator was shifting down. And as you can see here, I have my MACD, so I have one low here and I have a lower low. So this is a bearish divergence. So I had this one, the bullish hidden divergence. The momentum indicator was shifting lower and the market was making higher lows. And still we didn't have, guys, the strong move up that I was expecting. So it's very interesting to analyze what happened. So first we can see that we have the divergence here, but it's not perfect, all right? It's not perfect. You can see that here the market is not rebounding, as beautifully as it should in the theory. All right, here you can see that the momentum is rebounding stronger. And of course, if you wait for this strong rebound of the momentum, probably the price action would be much higher already. So that's why it's very interesting to try to use these signals very early, because they are early signals, and if you use them early, you have an advantage compared to the other techniques. So I like to use this, and I can tell you that usually when I see that, the market is rebounding. Now, do we have that? I don't want to scare you guys, but this is my alternative scenario today. I'm going to come back to it very soon. Did we have it on the hourly time frame? It's very interesting to notice as well, from here, for example, to here. So this is another one. Okay, I'm checking another one, and here you see that we don't have it. All right, the momentum indicator is not going lower when the market is making higher lows. So it's always interesting to see, if you have it on the hourly or on the 4 hours. Once again, I'm going to explain this very carefully, guys, in the course I'm preparing. Here, you should not use the hourly divergence to spot this kind of move, because you can see, guys, we have too many waves. 1, 2, 3, 4 waves. It's a bit too much. If you have 3, is fine. Okay, 2 is perfect. For example, here we had 2, but the second wave was not rebounding strongly. I'm talking here about the blue line, which is the MACD. So you use the MACD indicator. The blue line is the MACD. The orange line is the exponential moving average of the MACD itself. And the signal of the MACD, which I'm not using here at all, is the difference between those two lines. I'm only here using the blue line, which is the MACD, which I use as a momentum indicator to spot divergences. So basically, what I wanted to show you guys here is that even when we have a bullish hidden divergence that is beautiful, on the 4 hours time frame, that is, to me, almost perfect, we still manage to break here this level, guys, and to go to 37, all right, with very strong moves down. So what is this telling me? I don't like to talk about market manipulation, because it sounds like, a small group of people can actually control AMC price. No one can control AMC's price. No one, all right? It's a free market, and this stock is just following, the usual demand and offer mechanisms. But here, when I see this kind of behaviors, what it is telling me is that some people might actually agree between each other to take one action here, selling together. And I think that this is what happened, guys, because why didn't these people, a divergence is telling you that when the momentum is going lower, the sellers are taking ground. Why didn't they take more ground here at the 52 level here, where I had my divergence on the 4 hours time frame? Why the market didn't go down here? Why did it go down here? So maybe there was some news, maybe, stuff like this. Once again, I'm on holiday, so I don't have time to check everything. But from what I see, the sellers just are well organized and they decided to all sell together. So whatever. But I just wanted to point this out to tell you guys that we need to be very, very careful on AMC when we see those kind of divergences. Because even if you have the divergence signal, then maybe you can realize that actually the sellers were hidden and they're gonna once again act all together and make AMC price shift lower, which happened here. Now, I'm gonna come back, guys, to what you wanna know in this video. I'm gonna give you my different scenarios. So basically, my preferred scenario is that the WXY is complete. Once again, I showed you guys that it really looks like the example of the books. There are not many examples, guys. There are like 2 examples. Actually, you have this one, and then somewhere you have a real market example. So basically, you have 2 or 3 examples, and you can see that amongst those 2 or 3, I found AMC's one. So here, if this is complete, we're gonna have here the 5th wave starting. So 1, 2, 3, 4, 5, something like this. I don't want to talk about levels here, but my level is 130, maybe 100 only. I'm gonna update you guys while we go there. But for now, this is only 1, 2. What you guys want to see, what you absolutely want to see, guys, is a break of this trend line. All right, a breakout of this trend line that is here. So we see it better on the hourly time frame here, guys. Okay, for this scenario to happen, we need to break this trend line. So right now the level is around 48. Once again, 48, guys. This level is important. It was the breakout level here, and it might be the breakout level, but of a different trend line. The trend line I have connecting here, the highs, you know, the yellow one, this one. So basically what you are looking for, guys, is something like this. As usual, we break it, we retest, and we go higher. All right, so you wait and you buy the retest if you want to enter this trade, as we should do. All right, so this is my first scenario, and then we're gonna have a 1, 2, 3, 4, 5 going higher. But I need to tell you something, is that, you know, there are alternative scenarios that we need to take into account as well. Here, 333. All right, so you can see that you have a double 3, which I just showed you guys. So WXY, but you can have WXYXZ. So something like this. So it's possible as well that we get 2 more corrective patterns. All right, so maybe an X, so something like this, ABC, and the last ABC, or maybe triangle. Maybe triangle, you know, triangles are often the last wave. So I'm waiting for this triangle, actually, you know, I'm waiting for this triangle. When I'm going to see this triangle, I would be very confident that the 5th wave is starting. So this is my second scenario, is that we have WXYXZ, and then we go higher. And I need to tell you that we have an alternative scenario that is ugly, guys, but I don't want to blind my eyes and look at it. So we're going to have a look at that scenario. To do that, we're going to invert the chart. And we're going to try to imagine, because I like to invert the charts because I'm used to see stocks going higher. So I don't want to get some psychological biases thinking, you know, that everything goes up. So I'm just invert the chart and I try to see when I would enter this trade in a bullish case. So this would mean that basically we had a trade. So let me invert again. Sorry, I did it too early. So here, you know, I have my third wave, fourth wave. At the beginning, I was telling you that this is a fourth wave. So maybe the X wave here is a truncated fifth. Once again, guys, you can find everything you need about truncated fifths here. All right, I'm not going to go through this here, but basically a truncation, you know, is when the market fails to do the 5th wave. All right, so basically you have 1, 2, 3, 4, and the 5 is not going higher than the 4th wave. So this could be a truncated fifth. So then, if this is a truncated fifth, it means that here we would have a 1, 2, 3, 4, 5 starting. All right, it looks like this. All right. 2, 3, 4, and 5. Okay, so now let me invert again. So we have this ugly alternative scenario, but we need to be prepared for it. So guys, what you want to see, once again, I show you guys here that we rebounded exactly, guys, on this trend line here is acting as a resistance. So we have a double resistance here and here. So now that it's the same level, around 50 level, you know, 48 would be probably on Monday session when at the open. So this is the level where the 4th wave rebounded. So here we might have you know, a 5th wave starting on the downside. And if we do, guys, what is the level that would tell us that this is starting? It would be this level, guys. All right, so basically the 45 level. So you can use here either a trend line like this. Okay, you have many things here actually, you know. Let me go on the 30 minutes time frame. On the 30 minutes time frame, you have this 50 period moving average that is here roughly. You have this trend line, you have the 45 level. So basically all this area between 45 and 46 is the area that is telling us that the 5th wave of the alternative ugly scenario is not happening. So as long as we are above that, we are safe. And once again, guys, even in this situation, it's important that, you know, just don't panic, because look, imagine we have this ugly scenario. What would then happen? As usual, guys, okay, if this is meant to go higher, which means as I inverted the scale that AMC would go lower, okay, here maybe we completed this 1, 2, 3, 4, 5 in yellow and we had the truncated fifths, you know, this scenario would be like this. Bam, bam. Okay, no more WXY, sorry. And then if this happens, guys, what can we say? We can say one thing for sure, is that this is a 1. So we're going to have a 2, all right? and I don't want to talk about anything else, but I just wanted to tell you guys that anyway we would have a retest of the 37, 38 area, even if we go to 24. So 24 is an amazing level to buy if we go there, and probably if we go there, guys, this would be ugly. We would then, I don't imagine that after going to 24 we strongly rebound. All right, this would maybe be the end of AMC, but we are far from it, guys, for now. But I just need to update you about everything. And once again, here, guys, look at this false wave. You know, is for those who are watching my video for some time, you're used to know, you know that false waves are usually zigzags, flat, triangles, you know, stuff like this, stuff that is like, you know, consolidation. This is not a typical false wave at all, guys. This is not even a zigzag. I don't know how to label this stuff. To me, like, yeah, things are not this way. More like this. All right, so I think that AMC would break the 48 area, that we're gonna have the retest of this area, and that we're gonna start the fifth wave finally and go to the 135 area. Alright, guys, so that's it for me. I hope you enjoyed this video. I hope I managed to explain to you how I build up my different scenarios, what techniques I like to use, what are divergences, why divergences sometimes are tricky to use on, you know, stocks that trade, because some people say that the volume is lower. The volume is very big, guys, around 6 billion USD trading every day on AMC. So it's like, you know, 20-30% of the market capitalization. It's a lot, guys. So AMC is still very hot, and that's why sometimes it's tricky to analyze this stock, because you have so strong volumes coming, and if, you know, sellers organize, then of course they're gonna manage to take some ground like they did last week. But buyers are better organized, guys, so I'm not worried too much about that. I think we're gonna finally go to the 135 area very soon. So if you enjoyed this video, please don't forget to click on the sub, like, and bell button, so you're gonna be the first to know when I upload anything new. And stay close to shore. I'll see you guys.